Welcome everyone to HFN, also known as HueFin News. Today is February the 11th, 2021. We're going to give you all an update price prediction for the commodity gold. We're going to see whether or not the trap can continue to increase its price so that we can make sure we are in position to capitalize on the price move. Now, before I go into that and take a look at the previous performance of the trap against our forecast, make sure you hit the like button, share the video, and also subscribe. It's one of the things that we are here delivering is information and news to ensure that we are all in position to capitalize on the next price. Now, you guys can see last time we did our prediction in gold was on the 8th of January 2021, which is right here. We anticipated the market for gold to go lower in price, and it has done that. The market in gold has went lower. As you all can tell, we emphasize on that particular video. You can check it out. It is on our other channel, HueFin News, the original channel, to which we talked about tagging out the market around $1,820 to $1,800, and it has done that, right? 2.5%, even 1.25. Now, both of those occurred. The first one on 1820 occurred on the 18th of January. The second one of around $1,800 occurred on the 4th of February. So not that long ago. But generally, our forecast was pretty much on par to what we expected to see from the trap. There are plenty of opportunities for us to come in and take some of this profit off the table. I mean, even if you were to get out right now, it's minimal, but 0.1% profitability could have been had right now if you were to get out the market in gold. Okay, now that is done, that is over. We need to take a look at the market in gold right now. As you all can tell, we've been tracking this market continuing its upward momentum of trending higher in price, which is very good. Now, starting here, okay, on August the 6th, 2020, we can see that the market in gold has been trending lower, right? We've been seeing the market in gold moving to the downside. We had a couple of spurts to where the market broke the descending line, but we came right back down below it. So the current sentiment in gold right now, you can say, is the market is weak. Now, when you look at this particular commodity on a longer time frame, okay, there's definitely a lot of emphasis and influence being had around $1,800 and higher to keep this market propped up. The market is not following. The market is not following this particular 3-day price bar. Instead, we have a lot of market participation going on, propping up this value of gold. Because if the market truly was weak, as this 3-day bar emphasizes, we would have seen a major movement to the downside, but that hasn't occurred. We've had $1,800 ultimately back down to $1,760 as support. Now, 5-day time frame is where we can actually see that the market in gold is being propped up around $1,800. It is right here. Let's go ahead and show it to you. This is where the market in gold is being propped up. We broke that support area of $1,800 right here on this 5-day price bar, but we were able to close toward the high. Same thing on this go around. So on this analysis, on this prediction, we're looking for the market to hold support at $1,800, ultimately no lower than $1,760. Okay, so I'm going to hold that there. We're going to utilize this to our benefit because the trap has distinguished and has shown us that is what he's trying to do. So I'm going to get rid of this ascending line now. We need to see the market trade above our support area. Okay. So what we're getting over the last couple of 5-day price bars is simply the trap showing us that he's trying to trade his market sideways. He's simply just trying to bounce the market here to 1960, back down, going back up. This is the current price action that we're anticipating to see in gold. Okay. Now there is an area of restriction, 1880, 1920, 1960. Those are the 3 areas of restriction that we would expect to see more selling appear. Okay. So let's do this real quick. Like I said, we're going to continue to anticipate some strength to come into the market in gold. Right. Now, the first area of restriction is 1880. Okay. We would skim off a little bit there. Simply mean we would take some of that profit off the table because we realize that that area has been a hindrance in the price movement of going higher. Next area will be 1920. Ultimately, 1960. All right. So we're going to bring it down to around 1920 though. And we're going to play this on the daily time frame. Bring that up just a tad. And we're in position. This is our expectations going forward into the market for gold. We're not expecting a monumental movement higher in price, neither a monumental movement to the downside, but rather traded within this range. Okay. Our TP will be around 1880 to 1920. Yours might be something totally different, which is fine. Where do you all expect the market to go? Because you need to get in your position to capitalize on where price is going to be in order to take the trap's money. Because if you're not, he has a greater probability of taking ours, and we cannot allow that to happen. So let us know in the comment section as to where you think the price of gold is going to be over the next 2 weeks. Okay. Where do you think price is headed? Because you need to make sure that you're in position to capitalize on it. Let everyone else know in our community where you expect gold to be. And at what price would you take the lick? At what price would you take the trap's money? Let us know. Make sure you maintain a profitability. And as always, trade different.